NVIDIA, fiscal second quarter, reported August 26th. Revenue of $96.2 billion, up 106%. Earnings of $222 against $209. Then they guided a full year out, about 70% growth in fiscal 2028, and they called that a supply number. They also reset the margin story. This morning, the regular session opened 6% higher. Research only, not investment advice. Here is what the print actually said. Before any of the numbers, look at the tape. 9 months. NVIDIA broke structure through 217 in the spring, then ran to about 236 in May. Momentum made a higher low while price was still washing out earlier in the year. Versus the NASDAQ 100, NVIDIA held a higher low near 190 in June and July. Into the print, the close was 209.66, relative strength about 55. This morning it opened at 222.86, a gap of about 6%. Every print has 3 layers. The bar is the estimate. Did they clear it? The path is the trajectory. Is the business actually growing, and how fast? And the mood is whatever the market had already priced in. NVIDIA cleared the first 2, and growth is still accelerating. The third layer is the margin reset, and a stock that had already been sliding from the May high. Start with the bar. Research only, not a trade call. Earnings came in at $2.22 against $2.09. That is a beat of about 6%. Revenue ran about 4% ahead of the book at $96.2 billion. Against their own $91 billion guide, the beat was larger. One quality note: GAAP earnings were $246. Sequential net income only rose about 2% because last quarter had a fat other income line. Operating income is the cleaner path. That rose 19% from the prior quarter. Now the path. Revenue more than doubled, up 106% to $96.2 billion. Sequentially, sales were up about 18% from the April quarter. Operating income went from $28.4 billion a year ago to $63.7 billion. Watch the green line keep steepening. This is not a beat that is slowing. Year-over-year growth accelerated from the mid-80s last quarter into triple digits here. Put the scorecards side by side. Same quarter last year, prior quarter, and this quarter. Revenue from 46.7 to 81.6 to 96.2. Operating income from 28.4 to 53.5 to 63.7. GAAP earnings from 108 to 239 to 246. The year-over-year column is the loud one. The sequential net income line is the quiet one. Where did a revenue dollar go? About 25 cents into cost of revenue, about 9 cents into operating expenses, and about 66 cents dropped to operating income. Operating margin about 66%. Gross margin held at 75% this quarter. That is the number they just told you will not hold. The engine is still data center. Management said data center was $89 billion, up 117%. The ACIE book, Neoclouds, Enterprise, Sovereign, was $40 billion, up 138%. Operating income up 124. Edge computing up 27 to $7.2 billion. And for the October quarter, they guided revenue to $108 billion, plus or minus 2%. No China data center compute in that number. Now, what they actually said on the call. Jensen leaned on the inflection. AI is doing useful work. Tokens are productive and profitable. Compute is revenue. Colette said fiscal 2028 revenue should grow about 70%, and she called that supply constrained. Vera Rubin started shipping this month. They expect the fastest ramp in company history. Jensen said unconstrained demand is closer to 100%. Then the flags. Memory prices have already beaten their prior expectations, and they are still going higher. Gross margin bottoms in the fourth quarter, 71 to 72%. They know people will call the lab financing circular, and China is not in the outlook. And the mood around the name. For the month into the print, coverage was mostly neutral. Average tone near 0.08. After the print, the average ticked up to about 0.12, still mixed. One headline put them on track for the second largest tech company by revenue. Another said the results were not impressive enough. The argument is not whether they beat, it is whether 70% growth is enough once margins get. Now zoom out to 2 years. NVIDIA climbed from the low hundreds through breaks at 144, 195, and 217. The May high near 236 is still the peak on this tape. Into the print, 209.66. This morning it opened through 222. Relative strength faded from the 80s in May into the mid-50s. The business accelerated. The stock did not make a new high into the number. Layer 3. What was priced in? Relative strength into the close was 55. The stock had already slid from 236 to 210. This morning, the regular session opened at 222.86, up about 6%. Last around 224. Growth is working. The 70% year is working if supply shows up. Friction is the margin reset, memory costs, and the circular financing debate. So, business problem or bar problem? This quarter, the bar was cleared, the path is still accelerating, and the mood is arguing about the margin. This morning, it opened 6% higher. Watch memory costs, watch how fast Rubin mixes in, and watch whether supply can even get close to the demand they described. Research only, not investment advice.